Mark, when I spoke to you last before,
Yeah.
or text you, you had just left Channel 9, and I presume you were having a chat about the rate rises that
Correct.
were given today. So I'd love to talk about it. You know, your view, was it necessary? What's the impact? Will they go again? So firstly, was it necessary? Did we need it?
Well, it depends how you look at it. So the Reserve Bank, our Reserve Bank, has demonstrated a new style that they like to execute on, and that style is not necessarily about making interest rate decisions based on the data as of today. But what they do is they take the data as of today and they extrapolate forward, and they say, well, given the data today, we expect inflation not to start to come down now until 2025. Therefore, we think that's too far away. And as a result of that, we're going, when I say come down, this obviously if inflation is coming down, but they mean get down to the territory they feel comfortable with. They're saying, therefore, as a result of it, we're not being able to forecast a low enough inflation rate until too far out, we will change interest rates as of today, that is the 7th of November 2023, in order to make that happen faster. So that's not unlike the way they looked at the data they had in 2021 when they were extrapolating inflation as not being a problem until 2024. And that's the very reason they didn't put interest rates up in 2021, because they did a forward-looking extrapolation of when inflation will start to kick in. And as a result of that, they didn't start to increase interest rates until too late. Now what I'm worried about is they're increasing, the last increase, the increase for today, is looking too far out, and as a result of that, they shouldn't be increasing the interest rates. Say, if you sort of see what I'm getting over there, they're not looking at what's the deal today. If you looked at inflation today, it has fallen for the last 3 quarters in a row. If you look at unemployment has slightly increased, which is what they want to happen, over the last 12 months. Everything is going in the right direction. There was nothing that was there to suggest that inflation will not reduce. The only thing that's there is that it might suggest that inflation might not reduce at the speed they wanted to reduce at. But, you know, like, as I said, Tommy, like, they could have actually said, oh, well, if inflation doesn't, you know, come down to the levels we want to get down until, say, March 2025 instead of, December 2024, who gives a damn? Why run the risk of one more interest rate rise, which could actually, as I said, this could be the rate rise that stops the nation? Or as Paul Keating said, the recession we had to have. This could be where we're heading. That's what I'm worried about. Why would you take that risk? Because you might not be getting this inflation to come down where you want it to come down for maybe 3 or 4 months further on. I don't get it. I just don't get it, mate.
Mark, I watched the video that you put up, I think earlier today, before the rate rise, where you talked about, and I've got to agree with you, because that's the feeling I was having just talking to the average punter in the street, the buyers I run into at auctions on Saturdays. Oh, no, rates are definitely going to go up, right? It was like nothing had happened for 3 or 4 months. Then all of a sudden, this self-fulfilling prophecy, and everyone had agreed rates are going to go up. And I just think to myself, it would have just made it easier for them to think to themselves, you know what? Like, I don't think we're going to get this big uproar. You're new in the job. We can't really raise it in January because there's no meeting. We got to pick, if we're going to do it, let's do it now instead of there. But I think what had happened, Mark, is I don't know how, whether it was the media, but in a matter of 2-3 weeks, these numbers came out 2 weeks ago, and it was like all of a sudden, rates are back on again.
Yeah, I reckon, look, there's a sense in my mind, and I don't know how it started, where it started, but it's like we willed ourselves into a rate rise. Like, we were willing for it. We're like, and like, as a gift to the Reserve Bank, of course they're going to say the inflation's at 5.4%. They're going to say, you know what? Everyone's going to cop it sweet. It's Melbourne Cup Day. No one's going to really pay attention. By the way, the general consensus, of 51 economists out of 55 is that rates are going to go up. So let's just put one into them. And no one's going to notice the difference anyway. But, mate, people like Ross Gittins, Alan Kohler, Steve Koukoulas. Mate, these guys have said there's no need for a rate rise today. There is no need. Things are happening, maybe not exactly at the speed that the Reserve Bank would like to have it at, but they are happening, and it is all going in the right direction. Inflation is going in the right direction. Sure, services are up a little bit, but the goods part of the inflation formula is going absolutely the right direction. Retail sales were up a little bit for the month of October, but that's because we've had a pretty warm spring, pretty warm winter, and we've got 500,000 people just arrived in this country over the last 12 months. They have gone out to buy stuff. So sure, retail sales might have gone up a tick, but they're not traveling very well. Consumer confidence is down, mate. Down, down, down. Unemployment starting to rise, and we hit 3.7. We flipped back a little bit to 3.6 more recently. But if you go into Seek and look at new job advertisements, they're down by 17%. So everything's saying, and if you go and look at the US's inflation is not moving as quick as they would like to move it out. Yet Jerome Powell only last week said, but we're not going to put interest rates up. We're just going to wait and see. So I reckon there was plenty of technical reasons where they could have got comfort in not putting rates up, but I reckon it was too seducing, too seductive not to put rates up one more time, just to make sure that they bring the inflation number down at a faster clip than they were expecting.
Yeah, and ironically, Mark, I'm actually thinking that these rate rises that have happened, the impact is starting to actually be felt a little bit now. And the reason I say it is that it appeared that while it was happening, and you come from that world, there's always a delay between announcement and the administration of your new rate and your new loan repayments. And then what happens is often the first 4 or 5, we can live with that. We had to redraw money in the account. We're all good. But of late, of the last couple of weeks, I had noticed people was telling me, I had one property. I said to the guy at Fairfield, there was a cheapie, it was 700,000-800,000. I said to the owner, I go, are you sure you're going to? He said, well, take it. That's the best we get. Just sell it. I said, are you sure? And he goes, am I sure? He goes, I'm now suffocating. I'm suffocating. He goes, I just want to go to sleep tonight. I haven't slept well for weeks. He goes, I want to sleep tonight. He goes, I need to sell it. He goes, these loan repayments, because I think at one stage, Mark, there was this view that rates were going to go up, but then they were going to quickly come down. But that doesn't look like it's going to happen anytime soon either.
No, I think that's right. And I think that's really, to be honest with you, like we are here, you and I are rolling around talking about one rate rise. Really what we should be really worried about is for how long is this new regime going to last? And if we ever get rate reductions, how many we're likely to get? And I've done a little bit of sort of playing around with the mathematics of it. For me, unless there's a war or something really bad happens in the world, like a global recession or something like that, but unless that's the case, which is probably unlikely at this stage, then we're probably only going to get 2 to 3 rate reductions. And if we get them, at one stage we were talking about getting them later in 2024, like towards this time, around about this time, 2024. But I mean, the number of rate reductions we're going to be looking at is maybe 3 maximum. Today's rate rise gives us the opportunity to maybe have 3. If there was no rate rise today, I was thinking maybe 2. And I think that somewhere the official rate, somewhere between 3 and 4%, which is like, let's say 3.5%, that's 3 rate reductions, is probably about where it's going to sit for a long period of time. So don't be sitting there hoping to yourself, oh man, am I going to, like, we're going to get out and see 2% rate interest rates, or we're going to see, somewhere down where we used to be down a couple of years ago. We're not going to see that sort of territory. I reckon we're going to see the official rate around 3 to 3.25 to 3.50, which means the retail rate is going to be maybe 5.5 or low 5s. That's the best we're going to see, and it's going to be sometime late next year, if at all. Might be 2025.
If you're a vendor right now, and you're feeling the squeeze, right? You're feeling the pressure, and you've been sitting there umming and ahhing. Do I hang on? a little bit longer and hope this all goes away? Do I sell and swallow my pride, move out of my home, get my family out? What advice do you give to the ones that are under pressure and are waiting in limbo to see? Because there is a group, and it's often not. It's often ones that are more west than east, if you know what I mean. The mortgage
Yeah.
bill.
Yeah. Well, that's a good question. I've been through the process myself. I always take the view, sell fast, just get the hell out of there. Just take the pressure off. And, I mean, I'm making an assumption you got somewhere to move to, by the way. The thing that I've never experienced is a rental crisis like we currently got. Based on the assumption you got somewhere to move to, you might be going to move out of state, you might be going to move to a region, you might be moving in with your parents. As long as you are assured of somewhere to move into, then my view on, especially if you've got kids, if there's a family there, I would sell. And I don't think, you and I know as well as anybody that there's a shortage of supply, and as a result of that, prices have been still going up. But that one more rate increase that we just got, that's going to make it a little bit harder for people to borrow. It's going to make things a little less affordable. It's going to take the sting out of the marketplace in terms of buyers a little bit. There's that one, it could be the straw that breaks the camel's back. That's what I'm worried about. So if I've got someone who's a likely buyer, if I've got an agent who says they've got a buyer for me, I would be selling, there's not much not far to go, because the book December, Tommy, people stop buying, you got like 3 or 4 weeks to get on your bike and get it moving. Because, come when the Christmas cheer starts and people start talking about Christmas parties and holidays and school holidays, the whole buyer market just disappears. And they're looking for a bargain too if they're going to buy.
Oh, Mark, even CoreLogic RP data shows that December is for buyers. It's like going into a lollipop shop, because you've got owners who have got fatigue. They want to get rid of their stock. But there's not many buyers out there. They're at Westfield Shopping Centre, or they're at the beach. The weather's really, really warm, middle of December, and I can tell you, you can get yourself a good buy in that time. So it's probably not the best time to actually be selling. The other issue that you just raised there, Mark, off topic, is the shortage of rental properties. Like there's an accident that's about to happen, because you can see it. The supply of stock is growing at a slower rate than migration into Australia. This you can see what's going to end up happening, that we're going to get into a place that, because they don't want to go live in Darwin, right? They want to live in Sydney and Melbourne, right?
So
And
the jobs are.
when they get off the airport at Mascot, right, I can see they're also not going off to, Mossman to buy a home. Their first spot is probably a 2-bedroom unit in an affordable area. Could be the Canterbury Bankstown area. They leave Mascot, they get a 2-bedroom unit, right? Builders aren't building any. And the reason why is the numbers aren't stacking up. Inflation says the materials have gone up by 40%. Profit margins for developers is normally around 20-25%. So it's not stacking up. They need land value to be reset for them to be able to make a profit. So they're not building. So we're going to have this shortage of stock. There's got to be thinking at a higher level. Like it's a little bit like the CEO, and I've worked for a few CEOs where they've done everything they can to get the numbers look good, to get a profit in the short term, not worrying about what's going to happen in 3 or 4 years, if you know what I mean. And that's what I think is happening with our housing policies.
As you know, the federal government announced maybe 2 months ago a $1.2 million house target, or new dwelling target, over the next couple of years. We're nowhere near it, hitting those numbers on current feasibility. So I was talking to some developers at the AFR summit who were telling me that some developers, one guy had 15 sites. He said only 3 of them are feasible based on profit, based on yield. As you say, they like to get 20-25% yield. These guys are operating 10% yield. You wouldn't want to be buying from them, because they're cutting corners, they're cutting costs left, right, and centre. These good quality developers looking at 20-25% return on the money invested. One, they find it very difficult to get pre-sales, and pre-sales are a precondition to drawing funds down from the lenders. And when the lenders do lend you money, they're lending you money at really high interest rates, particularly now that interest rates have gone up. So it blows the whole feasibility up. So as a result of that, and by the way, I'm making an assumption here too that you can get the approval. I mean, getting the councils to approve developments and or like higher density things in if it's apartments or housing estates, etc. That's not easy either. And we've got the current debacle with the state government of New South Wales in particular, where there's a whole lot of areas being deemed flood zones, etc. Like it's just become a nightmare, Tom. And so when it comes to renting, it's going to get worse. And we did have nearly 480,000 people arrive in Australia in 2023. And we're going to get the same number, unless they revise those numbers, going to get the same similar sort of number this year. So this financial year. So, like 1 million extra people and nowhere near that amount of housing, new housing, mate, there's an inflection point coming, and I don't know what the outcome's going to be because I've never actually seen those two things, like a high interest rate market and a very low supply of new housing. I've never seen those two things work together like that before, and a massive new immigration. I've never seen these things happen before, and I don't know where it's going to land. But part of the inflation problem is right now, by the way, Tom, is the services part of the goods and services basket. Goods are down. CPI for goods are down. Where the inflation is coming in is in the services section. That is rent, travel, accommodation, restaurants. And guess what? People, mate, who are in the older category, who don't have a mortgage or got a low mortgage, all spending money on travel and restaurants. And this is creating inflation. And as a result, those services and traveling. And as a result of those services creating inflation or adding to the inflation number, the higher interest rate is actually killing off those people who do have a mortgage. So where we are now, mate, is that those people with a mortgage, a new mortgage, say something like 10 years old, a 10-year-old mortgage, are subsidising the inflation outcomes of those people who don't have a mortgage. So 1/3 of the population is subsidising 2/3 of the population. And I reckon it's extraordinarily unfair. Well, it's not unfair. Well, it is unfair. Life's unfair, but it's sort of, seems to me, in a policy sense, wrong or not, just incorrect or illogical. And the government needs to step in here. This is where monetary policy is inadequate. This is where fiscal policy needs to come in. The government needs to come and say, listen, if you're someone who's earning 100 grand a year, for argument's sake, and you've got a mortgage, and let's say mortgage is no more than $1 million. And I remember this in the 80s because I was a person who participated in this. We'll give you a tax rebate on up to $1,000 on the interest you pay to your bank.
Yeah.
Look after those people at the bottom end. So take the pressure off them so they don't have to sell their property. And they don't have to be like the bloke in Fairfield you just described and feel like he's getting choked. The government needs to step in now, Tom, and actually help the Reserve Bank out with monetary policy. The previous governor was hinting at that. He wouldn't say it because he didn't want to be offensive to the government that was employing him. But he was sort of indicating it's time for fiscal policy to get involved and help us out a little bit. But this government's too scared to do that because they feel as though, I think they think as though that they're going to be criticised by the media. The media is vicious at the moment. They feel as though they're going to be criticised by the media for being a spendthrift Labor Party, which is what, generally speaking, the Labor Party can get sort of tagged with. So, our Treasurer's doing a good job of not being a big spender. But I reckon he should help out those people who are being choked because it's not their fault.
Everyone listening here, think about what Mark just said in the last 3 minutes. We've got 1/3 of the people who are paying the price. I got a guy in my street who said to me, I'm really hoping rates do go up today. I go, why is that? And he goes, I've got $3 million. He goes, with no risk sitting in a bank account. Life's great at the moment. He's got no debt. His home's worth, I'm going to say, it's worth about 4. I've worked out he's got 3 million in cash. He wants it to go up, right? So essentially what's happening is this guy, you're spot on. The person in Liverpool is being impacted with larger loan repayments. They can't do anything. They're choking. This guy here is getting extra income. He's traveling and he's at the hotels. He's partying. He's driving cars. He's pushing inflation. They're the numbers that they're looking at, inflation. So what you're saying is, at the moment, it's a one-trick pony, interest rates. You're saying, why don't you get the government to come in and say, hey, it's obviously this hammer is not enough to do the job. We've got one hammer that's hitting people at Liverpool, and we're getting a hammer that's hitting people in Double Bay. It's not working. What you're saying is to get the government. But Chalmers, I noticed the other day, well, about a week ago, he actually said, I don't think it's necessary for the RBA to actually put the rates up, right? So they're sort of saying, you be the bad guy, we're the good guys. You know, there's good and there's evil. We're the good guys, right? But I think you're spot on. They're going to have to sort of go in and segment it and try and help the cohort of people that are having the most pain and suffering.
I reckon this could go down in history as one of the greatest transfers of wealth in Australia's economic landscape.
Yeah.
Wealth being transferred from people who are now spending a huge percentage of their disposable income. They're spending it on paying a mortgage. In other words, they're not improving their house. They're not improving their life. The money just going straight to the bank. Okay. So there's no improvement. They're working hard and they're banking nothing. Everything's just going straight to the bank. They're saving nothing, right? And then you got on the other side, the 2/3 of the population, at least 1/3 of the population. I'm not talking about the people who rent, just the people who own their home. As you just said, Tommy, the example, they're earning the most interest rate that they've ever earned. So there's, by the Reserve Bank's monetary policy, there's a transfer of wealth from people who can't afford it, people who are encouraged to borrow by the Reserve Bank, by the way, and the government 3 years ago. Please borrow money at 2%. We need the economy to grow. Please buy new property so developers can make a fortune and buy these properties off these developers. And we'll give you a first homeowners grant. We're going to give you this grant, that grant. Please, please, please buy, right? Now we're transferring wealth from those poor buggers across to those people who don't actually need it. And I don't like it. I mean, I said something today about it. I know it's going to be unpopular. I'm probably going to get hammered by the media about it. I just don't like it. I don't know. Something about it is just wrong. It's unfair. It's illogical. It doesn't make sense. Ill-conceived. It's an error. And I'm not saying it's an error from the Reserve Bank, but in conjunction with what the government should be doing is saying, okay, look, let's help out those poor buggers who are really suffering because, you know, we encourage them to buy a house loan package out at blah, blah in 2020 when COVID hit because we wanted the economy to keep going. So we really encourage builders to build properties and people to buy these properties and people to borrow money at a really low rate. We encourage that. And we're all jumping for joy, you know, like it's great. And developers are selling it, making money hand over fist. It's like manna from heaven, just coming down. And now we're punishing them. We're saying, well, you borrowed too much money. You know, you borrowed too much money. Hang on, no, I didn't borrow too much. You lent it to me. You lent it to me because at that time you could lend it to me because the interest rate was only 2% and I qualified. Now you're telling me that I should sell my property because I can't afford to live there. Now, you tell me, where's the logic in all that, Tom? That doesn't make sense to me, mate. That's not Australia. That's causing division between the haves and the have-nots. And we've already got enough damn division in this country as it is. We just had the yes-no division. We now got the division between, are we pro-Palestine or pro-Israel? Like, you know, now we're going to have division between who's got money and who hasn't got money. Who can afford to, you know, who's making money out of interest rate rises and who's losing money out of the interest rate rises. I mean, I feel like I'm in this world of divided people. Like, and what's worse is going to be, you know, you just said earlier, it could be the people out west who are suffering more than people in inner west and close and in the city and in the east suburbs. So you get a sort of geographical division as well. And people in some parts of Brisbane might not be doing as well as some people in some parts of Sydney. Like we get a division between Sydney and, you know, all that stuff. And I don't like it. It's something wrong about it. And I just wish someone would sit down and bloody think about it and come up with some practical solutions. I don't know what they are because I haven't really thought it through, but like I know there's a problem.
But there's enough, listen, Mark, there's enough people employed getting paid money to think that work in the government, right? And I do know that it's always harder to actually, it's a lot better to go with the status quo. Just keep rocking up every morning, do it. You know, we don't change anything. My life's okay. My salary goes in the middle of the month. But I think that at the moment, based on what's happening, Mark, that philosophy and that approach is not working. I've noticed we got Maddie Lancashire's on here
Hey, Matt.
commenting, you know, who's and by the way, to all the real estate people here, the first person locked in for ARIC 2024 is Mark Bouris. We locked him in. You are an absolute favorite in the real estate community. We've got 4,000 real estate agents. Last year we had Reese Witherspoon and Caitlin Jenner. But this year we've decided we're going for local brains in Australia. But we are going to, there's a good chance we're going to, I can't mention it because that contract hasn't been signed up, but we've got that person that's kicking some major goals in the UK at the moment, who's going to get confirmed. Well, he is confirmed. It's whether it's virtual or whether it's face-to-face. But just let's leave that at that now.
Hey, Tommy, can I raise something with you? Have we got time?
Absolutely.
This is a philosophical conversation, of course. But the argument, and this is going to go right to the heart of things, the argument that we have to increase interest rates because you have to tame this evil thing called inflation. There's this very evil thing called inflation. It's a little bit like COVID. It'll kill you, right? So we have to tame this thing. So we're going to give you your medicine, and your medicine is interest rate increases, okay? Just like they gave us medicine, you got to stay at home. That's part of your medicine. And the other part of your medicine is we're going to get you vaccinated, okay? So now what happening to us is we're getting vaccinated against inflation because inflation's really evil, okay? And the vaccination is called interest rates. So if this rings any bells, okay? But if I could just talk philosophically for a second, because the Reserve Bank, every time they put out a statement, they talk about, you know, they go through this process. Inflation is really bad, affects the lower socioeconomic people. It reduces the value of every dollar you earn because, you know, every dollar doesn't go as far anymore. You know, like if you earn $100, you could only buy, before you could buy a whole lot of goods and services. But now with inflation, this evil thing called inflation, you can't buy as many goods and services because, you know, the buying power of your dollar is reduced. That's why inflation's a really bad thing. But I think to myself, okay, well, I get that. But so do you think also the Reserve Bank that putting interest rates up actually helps that? Because my cost of living has gone up if I'm a borrower, and now my interest rates have gone up even more, much more than the cost of a lettuce might have gone from $3 to $6. But my interest rate repayments are now gone up from $2,000 a month to $3,400 a month. So that's significantly much more than my food bill's gone up. So if you add the two things together, there's a sort of a dip in the logic because the people who we're worried about affecting if we don't tame inflation, they're the very people we're hitting up with the interest rate increases as well. They're the same people. So we're doubling down on the effect on those people.
That's a good point, actually. That's a good point.
Because the people who can, because Tommy, the people who are earning $1 million, $2 million a year, sure, they're not happy the interest rate's gone up and they might have a $5 million mortgage. They're not happy, but then it's not like they're going to buy mint steak instead of a T-bone steak. You know what I mean? They've still got money left in the bank. It's the people who have the marginal amount of money who just made it for a home loan 3-4 years ago. Now cost of living has gone up, so they're really struggling. And now we hit them up with more interest rate rises. We choke them. And I just think there's something wrong with the logic around all this stuff. And we keep getting, you and I, everybody, we keep getting fed this story about how inflation affects the lower socioeconomic people. Well, I sort of feel like it's a little bit how they'll feed me about COVID all the time. I'm starting to get that feeling, the same feeling. Yeah. Mark, go and get jabbed. Mark, here's your vaccination. It's called interest rates. I don't know. I mean, I'd like to know. Let's test this stuff out. Like, let's get a review. We just had a review of the Reserve Bank, but we didn't have a review of the whole policy behind the Reserve Bank. And but as you said earlier, we're still trotting out the same. It's the same conversation they've always trotted out. Like they just keep trotting the same stuff out. And I wonder if they keep doing it, are they going to break the economy? Are they going to break us? I'm worried about them actually overstepping the mark and breaking this economy. That's what I'm worried about, or breaking a part of the economy. And the big issue with Reserve Bank is, and everybody, all our statistics, is we look at Australia as an average. But Australia is not an average anymore. Melbourne is different to Sydney is different to Perth, different to Adelaide. Perth and Adelaide are on fire. And you can keep putting the interest rates up. It's not going to affect anyone there because, the average loan is about 350 grand. So it doesn't have the same effect as if you're buying a property in Sydney and you're borrowing $1 million. But you earn the same amount of money in Sydney doing an IT job as you do in Adelaide, doing the same job. There's no difference in the income. So, like when I say that, it immediately tells me that everyone who's got an IT job should move to Adelaide and buy in Adelaide, borrow $350 and live in a $500,000 house, which would cost you $1.5 million here, and probably live a better life. Maybe that's what they're trying to do. Maybe they're trying to get us all to move out of Sydney. Maybe they think there's too many people living here. I don't know, but surely these people, like the people behind these policies, Tommy, must be thinking about this stuff. Surely, the only two people in the world ain't you and me talking about this. For God's sake.
Well, I reckon you've come up with an incredible aspect of looking at it, because there are some similarities. There are plenty of similarities between this and the whole COVID and COVID injection thing, because they're saying to people, sorry, we're doing this, but we're going to save you a lot of pain. We've got to put the rates up because inflation is the evil thing. We got to get rid of the evil, and then by their actions, their cure is bigger than the evil, because what's actually happening is they're actually fast tracking the pain to the person. Oh, we don't want you to have pain in the future, so we'll give it to you now. And I quite frankly would be surprised if inflation pain is more than the pain that they're going with these 13 rate rises they've had for the people out west. That's a significant income. From you come from that world. That's roughly the loan repayments have gone up 3 times, roughly, or at least 2 times. At least 2 times.
Well, the average Australian, let's call the average a $700,000 loan. Those people are paying nearly $14,500 extra a year out of their income. But now that's after tax dollars. So the average Australian who could borrow $700,000 was a joint, like 2 people. They had to earn 150 grand. Okay, that's a full-time person and a part-time partner, for example. Between them, 150 grand. Those people's wages haven't gone up by $20,000. Because they had to have gone up by $20,000 to put them in the same position as they were a year and a half ago. Those wages haven't gone up by 20 grand. They just haven't. They haven't gone up by 13%. So that's an issue for me. And I actually agree with you, Tommy. I think the interest rate pain is a lot worse than the inflation pain. So the cure is a lot worse than the affliction. And by the way, we don't even know if the cure works, because right now, we're not sure if they're controlling inflation or not. It's come down a bit, but it's not down where they want it to be, 2 or 3%. And by the way, like it'd be different if inflation was 20%, and I earned $1,000 this month. It's only worth $800 at the end of the month. But it'd be different. But it's not. We're talking about like 5.4%. Like what and falling. It was 5.4% annualized for the September quarter. So if I go September recently, September 30 to September, August, the end of August, the previous period, inflation is 5.4%. And not every category do I spend in. So, like if you look at the 90 categories that make up inflation, whatever it is, most people don't even spend in half of them. It doesn't make sense to me. So we've got a national average for inflation. We've got a basket of goods and services that the Australian Bureau of Statistics chooses. How many times have they changed that? I don't know. No one tells us what's going on. We've got 1/3 of the population only has a mortgage. It used to be much bigger. Like 20 years ago, 50% of the population had a mortgage. Only 1/3 has a mortgage. So you know why that's the case? Because since 2010, so over the last 13 years, people fast-tracked their mortgage repayments, because up until 2022, we had only interest rate reductions. So if you borrowed money in 2008 or 9 or before that period, you enjoyed for 13 years, 12 years, I should say, up until 2022, you enjoyed rate reduction after rate reduction after rate reduction. And what those people did is they didn't pay a new schedule repayment. They just kept paying on the old schedule they paid in 2010. They just kept, because they could afford it. They were assessed to be able to afford it. Then they can afford it all that period. So what they do is every extra repayment they made, they paid their home loan off. So that's how they got into that position. They paid their loan down faster because they were paying their what was obliged to pay, but on top of that, they're paying the old schedule. So they're quickly reducing their principal very, very fast. And now we're in a country now, mate, where we've got a lot of people, and those houses, by the way, have gone up 100% since 2010. So we've got a lot of people feeling quite rich with a very small mortgage, if at all. And mate, those people are not going to pull their heads in because of interest rates. They're not. They're the people, along with the people who are retired and have no mortgage, those two cohorts of people are going to continue to push inflation around 4 or 5%. So question becomes, do we need to be trying to be jacking us to get inflation down to 2 to 3%? Or should we be looking at reviewing the inflation number and maybe settling at some other number, 4.5% for argument's sake? You know, should we be looking at that? I mean, that's my question. And if we're looking at inflation, do we have to look at inflation for the last 12 months? In other words, when we do the calculation, should we look at inflation for the last 3 months? Because if you look at inflation for the last 3 months and push it out a year, just make an assumption there's no change up or down, our inflation rate's around about 3.5% per annum at the moment. But if I look at inflation for the last 12 months from the beginning of September back to end of August last year, when we only had at that stage 4 or 5 interest rate rises, plus most of them hadn't kicked in, inflation was higher. Inflation was like 8%, around that territory. If you remember, at 31 December last year, inflation was 7.8% for the 12-month period. So if you look backwards, inflation still looks pretty high, 5.4%. That's because you're including September last year, October last year, November last year, December last year, January last year. The interest rates hadn't kicked in at that stage. Yeah. If you look at inflation the last 3 months, mate, inflation has kicked in. Interest rates have kicked in. Inflation is much, much more controlled. So for me, I reckon they've already done the job.
Do you know, Mark, the more, as I'm listening to you, I'm thinking to myself, a safer bet would have been do nothing till February, right? Yeah. Because you get more information and data, and you know what it's like. If you overstep the mark, right, getting back on track can be very, very hard. But they're paranoid, they're scared. But I think the main thing that I'm getting out of this conversation, who is the God that said this is what the inflation number is got to be? Everyone has just bought in. Everyone's just bought into it.
Correct.
Right?
Correct. They did this in 1996. So they come up with this 2 to 3% in 1996. We have had the same inflation goal since 1996. That's 27 years ago. Ask yourself the question, is that still a relevant 2 to 3%? Is that still relevant? Or given where we are today, given the change in who's got a mortgage and who hasn't got a mortgage, given that we've had 12 years of rate reductions and people paid their loans off, given that we're now bringing 500,000 people in a year, I mean, should we maybe thinking it's 2 to 3% right? Like maybe that should be a long-term goal. Maybe that's for 2030. We've got energy goals for 2030. Maybe we should have an interest rate goal for 2030. Let's have another goal, an interim goal between now and the next 2 years, for argument's sake. One that's not going to strangle half of the country.
Yeah. Well, Mark, and I know that sometimes certain inflation numbers include certain things and others don't, but generally speaking, rents are included in the inflation numbers. Are sale prices included in the inflation numbers? No, they're not. Okay.
No, but the cost of new housing is, so the cost to build a house is, but no, sale prices aren't. Rents definitely are, and rents included in that section of the basket of goods and services as a service. So rent's included as a service. It's obviously not buying something. You're
But
getting a service. Someone's
Mark, I can tell you, in my 37 years in real estate, when rates go up, interest when interest rates go up, rents go up. If interest rates go up, rents go up because the landlords are trying to, get their loan repayments covered. And when that happens, Mark, then inflation numbers go up because rents are a big part of the inflation. So it's
correct.
like the mouse going around on the treadmill,
It's self-prophesizing. It's actually fueling the inflation number, Tom. It's
Yeah.
fueling it. And so how does this supposed to be a cure? This whole interest rate environment is supposed to be a cure for those poor buggers who are experiencing high rents or high mortgage payment, so a higher cost of living. It's supposed to be a cure. It's not. It's fueling it.
Well,
I just don't
Mark, you
get it. Like,
mentioned
I mean,
before.
I don't know. What do you?
Yeah. No,
Go
I'm exactly on the same page. You mentioned before you went to the AFR a summit or a conference that they had. Was that
Property
the one
summit.
where
Property summit. Yeah.
was that the one that Gurn has been quoted and quoted over again? The developer copped a little bit of flack where he said that
Yeah.
unemployment rates have got to. I can't remember what he said. Double productivity has. He basically said there's got to be a lot of pain. Was that the same
Yeah.
one? Was that event?
That's that
Right.
event. Yes, correct. It
Okay.
was a 2 or 3 day event hosted by the AFR, and they had and I was one of the speakers. They had a number of speakers, property experts, whatever you call it, just giving different views. And like his view was sort of quoted a lot. It was sort of because it was a pretty out there point of view, but actually in some respects, maybe unemployment does need to go to 5.5% or 6%, like you talked about. Because at that we need to put Australia, or alternatively, I can go back to Keating, as Keating said, in 1991 or where it was, this is the recession we had to have. Maybe his Gurner's position is this is the unemployment level we have to have in order to stop the Reserve Bank from putting interest rates up anymore and start to drop the interest rates. And of course, they overdid it. And in those days, interest rates were crazy. I mean, they were 17% or something. But like the Reserve Bank left open in the last paragraph of their statement today, the possibility of rates going up again. Like it's stubborn. They're using the word stubborn, and they're using the word, the phrase, it's a narrow path. Then they dedicated a whole paragraph. They put in about 5 paragraphs in today's statement, a whole paragraph on how evil inflation is. We all know that you keep feeding this stuff to us. Well, I don't like. I wish someone would test that. I just
Yeah.
like to see that tested. It's an old. It may well be valid, but it is an old statement. It's a statement that I've seen over and over and over and over and over again 1,000 times. I wonder whether or not your friend in Fairfield would take that view.
Yeah. Mark, do you think that there's no way in the world they'll do it again in December, would they?
Well, they historically, very rarely put rates up in December because it's very unpopular with retailers, etc., apart from consumers. But there's no significant data coming out in November either. So there was a lot of significant data came out in October. So we had unemployment, we had CPI, we had GDP. And by the way, and there's nothing coming out in the month of November. So the next read of insignificant data, the reason we always get something happen on Melbourne Cup Day is because October is a month where we get a lot of reporting. A lot of data comes out from the Australian Bureau of Statistics. Not much comes out in November. Not much comes out in December. In fact, nothing. The next time we get a significant amount of data will be the 31 December numbers that come out late January, which is when the Reserve Bank meets is the first Tuesday after that. And we'll see CPI, we'll see GDP, we'll see unemployment numbers come out again. And I think what the Reserve Bank's going to want to see is they're going to want to see, in order to answer your question, will we see another rate rise at all, whether it's December or February next year, the Reserve Bank's going to want to see unemployment heading towards 4.5% because they've already made that point. They would like to see unemployment much higher than it is. It's currently at 3.6. They want to see they want to see GDP sort of rocking along at 1.5% to 2% in terms of growth, and they obviously want to see inflation sort of tripping down to somewhere low 5s or early 4s, late 4s. And they're the three things that we're all going to be sweating and biting our fingernails and holding on like, with grim terror in late January. And Australians have become aware of all this stuff all of a sudden, And by the way, increasing house prices doesn't help. House prices coming back. CoreLogic keep saying, we're hitting records, everything's been recovered. We've the 12-13% that we lost when the interest rates started going up. That's all been recovered. That sort of stuff we don't want to hear.
Yeah.
But I don't know how it's going to stop, Tommy, because there's no supply. There's just nothing new happening. There's no new joints being built. Again, that's government policy, mate. That's not you or me. That's not all the punters. None of the borrowers who borrowed, with their ears pinned back and their butts up, like back in 2020, 2021, early 2022. Those people who borrowed money then, they're not responsible for new housing. That's a government policy. That's state government, local government, and federal government. The three of them. And they haven't got their act together. And by the way, it's not us who allowed more people coming to Australia to fill up all the jobs. That's government policy. And where the hell are you going to put them? So, I know that they're getting a lot of pressure from employers and, all that sort of stuff. But where are you going to put these people? All they're going to do is push rents up, push house prices up because we've got low supply. That's going to make it look like rent's going to go up. And then, as you said earlier, that's going to say the Reserve Bank's going to say, well, services inflation is still growing, services inflation. So we might have to put interest rates up one more time. And it's going to kill your poor bloke in Fairfield, mate. And that's my dad in Punchbowl, 60 years ago. And I hate that. I mean, it's the reason I set it Yellow Brick Road up in the first place. And the reason I set up Wizard, mate, because I wanted to make a difference because I thought, I don't want people to have to go through that shit. And it's the worst. That's what originally got me going, that very thought. Because I remember whenever this happened, interest rates went up. My man, usually a recession followed, and my dad working in factories, was one of the first people to get put off. Because that's what they do. Factories have to put people off. And, an interest rate. And by the way, interest rates, the reason we had a recession is interest rates were too high. And I used to think to myself, this very conversation, I think, how unfair is that for the people who can't afford it, who can't afford to be affected by inflation, are being affected by interest rate rises, and interest rate rises cause a recession, and those very same people lose their job. And then the family's got nowhere to live, and everyone gets stressed out in the street where I lived. Everybody was getting stressed, I remember it. I remember the butcher used to turn up at our place, mate. The butcher in those days, you had a butcher down the road and a chemist down the road and a grocer. There was no shopping centres. And the butcher was so nice. The community was so good. Everyone knew each other. The butcher would come and put a packet of whatever meat he hadn't sold by Saturday lunchtime. He used to close at Saturday lunchtime. And there'd be a package of sausages and stuff there on our doorstep. And, no one said anything. Just you took it and were very Dad was thankful. Mum would have thanked the dude for sure. But I remember that stuff. And so this shitty policy where they overstepped the mark, both on putting interest rates down during COVID, they overstepped the mark. And then they overstepped the mark and putting interest rates up. And the question is this the one that some poor bugger is just gonna collapse somebody? Is this the one? And there shouldn't be one person, Tommy, I don't give a stuff. There shouldn't be one person who suffers as a result of economic policy. Not one. I don't care if someone's, it doesn't matter if there's 1,000 out of 3 million or a million. There shouldn't be one person who innocently suffers from government policy. Not one. I don't cop the greater benefit, because if you're the person who suffers, why should you be the dude who suffers and your family? That's wrong.
The one thing that you've really hit home, and I'm seeing it happen, Mark. I haven't seen it happen in my time. I've been living here. It's my whole life in Australia. You hear about it in other countries. The rich are rich. They're over there. The poor are watching them. It wasn't the Australian way, but it appears to be becoming the Australian way. I was in Melbourne over the weekend. I was watching these people in their 50s and 60s, nice cars, get out, going to the races. Life's good, dressed up. And then I flew back here, Mark. I flew back here and I did an auction. So I did the auction for the block on the Saturday, and I was in Melbourne. I saw it, and then I flew back and I did an auction in Campsie in Tudor Street, and I looked at the people in Campsie, and I thought to myself, we're in the one country, but it's becoming two different worlds. It's very, very clear. It's becoming very, very clear. The rich are getting richer, and the poor are getting the picture, as the Midnight Oil Peter Garrett song goes. You know.
Yeah, there's a thing in economics called the Gini, Gini, the Gini coefficient, which measures the gap between rich and poverty. And that Gini coefficient today is the coefficient is at its highest level it has been in Australia's history. So I talked about it right at the beginning about the division that's occurring in this country, and the Gini coefficient would bear that out. But it's exactly what you just said, Tom. The rich are getting richer, and the less I don't want to call them poor, because that's sort of giving them a label. The less lucky, the less, and they start to lose self-esteem and feel like they're less valued members of our society, when in fact, mate, for me, they're the soul of the earth. They're the most valuable people in our society. We need more of them. And by the way, I'm not upset about immigrants coming to the country. My father's an immigrant. Your parents were, I understand it. I get it. But let's do it in a way that makes sense. Let's not open our doors to too many people if we can't house them. And our own people who are sitting here have to pay double the rent. That doesn't make sense to me either. I mean, and where's the debate? Where are we ever getting, everyone talks about inclusion, government's inclusion, you've got to include this person. Where are we being included in the conversation about policy? Where do they actually talk to us, ask us about, well, do you think, is there a summit where everybody, they, instead of getting all the hoi polloi and all the super influential, powerful people there, do we have the ability to actually say what we think about this? We certainly don't get it through the media, because the media is controlled. Where does this conversation occur? Where? I mean, I haven't heard it. And you and I are talking about it at the moment, but I haven't heard it anywhere.
No, you've spoken about this before. Having someone have a voice, the people that are affected by the decisions to have a voice, because at the moment they don't have a voice. They're being given instructions. They're being delegated. Do this. Shut up. It's good for you. Just do it. Right?
Yeah.
Just do it. That's what.
Take the vaccination.
Take the vaccination. Trust me. Just pay another 0.25% this month. It's good for you. It will save you a lot of pain in the future. Oh, but sir, you don't understand. This is going to tip me off the edge. That's okay. Just do as we say. Well said. You're such, Mark. I can't. I'm talking to you, and one eye is looking at the comments, and everyone says the same thing. They all reckon you should get into politics. I don't think you should get into politics. I think I don't think you should get into politics. You don't need that. You've done enough. Mark Bouris, Yellow Brick Road. An absolute privilege always to talk to you, because you make sense. You, on the one hand, you are intellectual, but on the other hand, you talk like the people do. And that's why you're liked so much. Thank you so much, Mark.
Love you, Tommy. See you, mate.